Gold prices have come under pressure today in a cross-commodity washout triggered by OPEC's decision not to cut oil production. Spot gold was last seen testing $1,180 per ounce after holding steadily throughout the week, just below $1,200 per ounce. Lower energy prices are dampening sentiment in what could be either a pause in the breakout or a reversal of the gains made in the past 3 weeks. The oil prices plunged after OPEC left its output limit at 30 million barrels a day. Brent crude oil subsequently slumped to a low of $72 a barrel, its cheapest since August 2010, while WTI hit $69, its lowest since June 2010. Precious metals are generally holding up well given the downdraft from oil. If the dips continue to remain well supported, rebounds could continue at a steady pace. The slump in oil prices will of course be benefiting consumers. However, it does dampen gold's credentials as a hedge against low inflation. Also weighing on sentiment is a stronger dollar after the European Central Bank earlier this week hinted at introducing a quantitative easing program in the next quarter. The Swiss gold referendum on Sunday also appears to be playing on some investors' minds, although polls indicate that support for the Yes campaign is waning, with traders appearing to see a no vote as a foregone conclusion. Physical demand is also looking interesting at the moment, with our sources in India indicating that November could see over 100 tonnes of gold imports once again as importers panic buy ahead of the new restrictions expected to be announced next week, we're told. In China, demand is also showing signs of improving. Premiums on the Shanghai Gold Exchange are now up to around $2 or $3 over spot for 1 kg bars. Today, however, subdued once again following the US Thanksgiving holiday yesterday. In a quiet day for data today as well, the EU flash CPI estimate was 0.3% as forecasted, albeit down from a previous 0.4%, while the core CPI estimate at 0.7% was also as predicted, with the unemployment rate at 11.5%. The other metals though, silver broke through support at $16 after holding within that range throughout most of this week. It was last seen around $15.80 per ounce. Palladium and platinum meanwhile, which have been performing well on further supply issues with South African power producers, are fairly subdued today. Platinum was last seen around $1,200 per ounce, while palladium was around $800 per ounce. This is Ian Walker reporting for the Bullion Desk down here at the London Metal Exchange.